And welcome, it's Mary Ellen McGonigal with your Weekly Edge show for Friday, May 20th. Let's get started. Today, we, as usual, are going to take a look at some of the more impactful news that drove price action last week, another down week for the broader markets. And from there, we will go ahead and take a look at how the markets closed the week and what to be on the lookout for going forward. In addition, we will dig deeper, go behind those broader market indexes and see what's happening on a sector and industry group level. There are pockets of strength, and at the end I will share with you 3 stocks that are setting up very nicely, particularly given the current market dynamics, and I will explain why those stocks are looking attractive. So that is the viewer question of the week. So let's take a look at some of those news items from last week. We did get earnings and sales numbers from both Walmart and Target, and the numbers were not good. In addition, management for these companies guided their estimates for growth lower going into the rest of this year, and this really rattled the markets on the heels of Amazon's very similar report a couple of weeks ago. The fear there, of course, is that the economy is on a path for decelerating growth, not what you want to see, certainly not for the stock market. We did have good economic data, however, prior to those earnings reports. On Monday, retail sales in April did climb, very constructive. Also, industrial production had a 4th straight month of increases. Not only that, the number came in above estimates. So while the economic numbers supported the case for a growing economy, investors are choosing, in essence, to pay closer attention to those large cap retailers that are experiencing difficulties. We also did see slowing demand for housing. Interest rates, of course, mortgage rates are now up in that 5% range, where prior they were in the 3% range. So both housing starts and new construction numbers were down for the month. And we also did on Friday have a leading economic indicators report that showed deceleration in economic growth. However, we'll take a look at how the markets behaved responding to that number as we move forward. It was surprising. Next week, very important, we are going to be seeing the Federal Reserve meeting notes released. They will be examined closely for signs of the Fed's policy. And then also core PCE inflation data is going to be released later in the week. Both very much tuned into hot topics that are driving price action in the broader markets. So from here, let's take a look. Where did the markets close for the week? And here we are with a daily price chart of the S&P 500 index. And we can see it was overall another down week. We actually were down 3.3% for the week. Today on Friday, we undercut last week's low. However, we were able to close the day above that low. So certainly constructive, but not unnatural given the oversold conditions in the broader markets. From here, I did want to share with you an hourly view of the broader markets price action today on Friday the 20th, and we can see it. We opened very much to the downside. However, in the second half of the day, really the latter part of the day, we did see a nice reversal take place so that both the Dow and the S&P were able to dip just into positive territory. NASDAQ could not quite make it there. This is constructive price action. If you have a steep descent and are able to close the day in positive territory. However, we would need to see successive days of this price action in order for it to be meaningful and constructive longer term. So from here, let's go ahead and take a look at those underlying sectors in the S&P 500. This is a 2-month daily price chart of those sectors. I've added an RSI, relative strength indicator, sorted it in descending order. And we want to see where there is relative outperformance. And we can see energy up here at the forefront. Energy stocks continuing to trend higher. And as we move forward, I'll share with you some of those dynamics but certainly earnings among those energy companies is one key driver. And then healthcare up here, it was up almost 1% for the week in an otherwise negative market environment. And we can see that after peaking in price back here at the end of April, we had a precipitous drop off in healthcare stocks, and they are attempting to reverse that downtrend. The group is not constructive quite yet, but I will share a couple of names and reasons why healthcare is coming back into favor, at least just a little bit, or the beginning stages. Utility stocks up here at the forefront, so energy, healthcare, utility were the only positive sectors this week. Utilities up a little less than 0.5%, but these are certainly healthcare and utility stocks are quite defensive. One occurrence that took place this week that was rather startling, and that is the steep sell-off in consumer staple stocks. No news specific to this group or those stocks, but quite simply in response to negative growth outlook for consumer-facing retail companies pushed down these stocks. In essence, a sense that we could see slowing in some of these bigger consumer staples names as well as it relates to their growth. Moving along, I did want to go ahead and take the review a bit further and share with you some sub-industry groupings. These are ETFs that I've found to be very helpful as it relates to really staying on top of what is taking place in these broader markets. And again, that relative strength indicator, so your stronger areas up here, weaker areas down in the lower right quartile. So first up, we can see Brent crude oil prices remain elevated, closed the week at $111 per barrel. And this, of course, is one of the drivers that is keeping energy stocks elevated. And from here, we can move on and take a look at the US dollar. It is still up here in the forefront, but it is pulling back from this high that we reached last week. This is generally good news for certain areas. I will share that with you as to where, but we can see that we did get into this overbought position on that US dollar with an eye toward a potential pulling back. Let's move on, take a look at some of these other stronger areas and volatility up here. It did close the week just below 30, however, remains quite elevated. This fear index, usually if it's around that 18 level, it is indicative of a more calm market environment with investors having confidence, but we still remain elevated as a lot of uncertainty still remains in the markets as it relates to inflation, the Fed's actions, and other factors. From here, there is an area I wanted to share with you. We talked about healthcare moving up this week, up about 1% in a down market. And this is one contribution, and it is the Biotechnology Stocks. This is IBB and ETF. We can see it is up for the week, and it actually gained 2.3%, and that's relative to the NASDAQ, which was down 4.2%. And certainly there are names there, and I will share one with you that is looking quite interesting. And also another dynamic that we can take a quick look at. It's not overly dramatic, but we did see a bit of an uptick here in gold stocks. They were up 2% on the week. We talked about that dollar pulling back. Generally, in a rising US dollar environment, gold stocks will falter. So we'll see if we can see a continuation here that would amount to a reversal. We're not quite there yet. The charts aren't set up for that just yet. So from here, I did want to go ahead and share with you several stocks that are, as I mentioned, not only bucking the downtrend in the markets, but actually have very constructive charts and are setting up quite nicely. First up here is Pfizer. This is a large cap pharmaceutical stock. This is another reason that healthcare was up this week. Pfizer, as well as Merck and several other large cap heavyweight names, did rally for the week. So let's take a closer look here at PFE and a couple of items I did want to share with you. We had a nice 2-day rally. The stock was up 3.6% in a flat market on Friday, and the reason is because the company did get approval from the European Union for their vaccine for younger individuals, and that's expected to expand growth for the company. Pfizer already had just come in with positive numbers back here in the beginning of May, so a nice add-on rally. The importance here is that Pfizer closed the week above this red 50-day simple moving average, and now it's above all of those moving averages, so your upside resistance is no longer there. We also have an RSI trending upward and above that 50 level. And let's take a look at the MACD. This is another momentum indicator, moving average convergence, divergence. And we have this nice black line up through the red, and that is simply signaling that this downtrend is in the throes of reversing, and we got confirmation today of that reversal. And the MACD is just today dipping up above that zero into positive territory. Another characteristic for this stock that is very common among those names that are bucking the current downtrend is the fact that it has a low PE, that's the price to earnings ratio. It's only at 10 times. The average multiple for the S&P 500 is closer to 18, 19 level. And in addition, Pfizer has a nice 3% yield, and that is very attractive in a period of rising inflation. These lower multiple, higher yielding stocks, known as value stocks, are constructive, and when you can marry that with nice growth characteristics, that's really quite positive for these stocks. I'll go ahead and share another stock with you, and that is Dow Holdings. Now it's a little bit sloppier here, but it is worth noting that the company, I'm going to go ahead and pull up a full quote here and share some of the characteristics with you. First up, it is in the chemical space. This is a commodity stock in that sense that it is a chemical commodity company. And commodity stocks are another area that fare well during periods of rising inflation. We can go back and take a look at the recent release of earnings. The stock gapped up on the news, and after having a move from 61 up to 72, a very natural period of consolidation, albeit a bit sloppy, but it did close the week back above this 21-day simple moving average. Your outside momentum indicators are positive, and then here again we are looking at that PE. It's trading at 7 times trailing 4-quarter, and also offers a very healthy 4.2% yield, making this stock attractive not only for those characteristics, but also the fact that these big 72% year-over-year earnings growth. Last up here is a foreign stock. It is a Brazilian mining company. Vale, V-A-L-E, is the ticker symbol. A couple of things I wanted to point out to you. And first up, I will share with you the Brazilian stock market. It has been the top performer for this year. Here we are at the beginning of 2022. You can see the nice run up here, very different from certainly US and European and other global markets. It has sold off sharply, but is in the throes of attempting to recover its uptrend. Its outside momentum indicators positive. So that is the Brazilian stock market. We can see Vale trading in line with that sharp sell-off, and then in the throes of reversing this downtrend. Let's take a look at the moving average, convergence, divergence. We can see the black line up through the red. That is constructive. Ideally, what we're on the lookout for is this MACD to turn positive in line with a break above this red 50-day simple moving average, but certainly there is room to go from this 16.8 level up to 18. It's going to be all about how it behaves here as it relates to moving higher. The RSI just dipping into positive territory after coming out of an oversold position. That's when this RSI trades below 30. We can see historically that rallies out of this oversold position can be healthy. The company also sports a very low PE, 4 times its trailing 4 quarters, a very healthy yield, 16.1%. And of note is the fact that earlier this month, Tesla did ink a deal so that Vale will be supplying nickel, which is one of the metals that they mine, to Tesla. So that is anticipated to improve growth prospects there. I'm going to leave it at that. Everyone have a great weekend, and I will see you here next week. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.